also wanted to just get a sense on the broader index as well, the mid and the small caps. How should one approach this space? Is it going to be, again, a very stock selective approach at this point in time? Will one make a mistake by going, index based at this point? Because the index has been showing some resilience, has been recovering as well. But how does one really identify the point where probably gets into a frothy situation, something that came up in conversations last year around the same time. And that's when things started to go downward for the mid and the small caps. So how does a retail investor really identify with the mid and small caps? How much is too much?
So I think first of all, unless you are investing in an index fund, one should not continuously look at indices because, let's say a Nifty mid cap 100 or a NSE 500 or whatever, right? You're not buying hundreds, 100, 150, 500 stocks. It pays much more dividends to look at the stocks that you hold, the industries that you are holding, and having a broad understanding of the future in those stocks or those industries. Broad-based, doesn't make too much of sense because in India, because we are market cap, weighted, most of these indices are very heavy on financials, banking. So you might actually see a bump up once the financials do well. But if you have a very broad, diversified portfolio, you might actually be underperforming, a particular index. But does it mean that that is a bad thing? I don't think so, because end of the day, your, expectation from a portfolio is that over a period of time, which is, in my opinion, at least 3 to 5 years or more, you are looking for good absolute growth, right? And that will happen, provided you have a decent selection of companies where the businesses itself are growing and that is the bottom line. So over fixating on indices is to me not going to be very helpful.
If you like the video, do like, comment, share and subscribe.